Happy Monday, traders. It's 8:01. It's 8 a.m. Chicago time on Monday, the 14th of September, 2020. This is episode number 1837. Thanks for joining me. Just a quick mic check. Just let me know if the mic is too hot or too low. I'd appreciate it. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, the market sentiment this morning is towards risk. We're allocating to risk this morning relative to Friday. Now, just a quick reminder: I was out on Thursday and Friday, no trader bites, so there's no review really, other than to look at what has occurred. We find ourselves in the same spot as the trader bite for Wednesday morning. So we have tested down and we're back. We're back to where we were last Wednesday. We're seeing the Russell make some gains this morning, leading the quote board for me on the futures market up 1.39% or 20.7 points, trading at 1510. So small caps leading, the Nasdaq also leading 1.34% versus Friday's settlement, or 148.25. Now, a big reminder here is that uh, this is rollover week. This is quad witching Friday this Friday, and so it's really important to remember, in case you have not gone through one of these or you have forgotten. It is really important to remember that the roll is in play. And so uh, um, we need to keep in mind that the volume is likely to be deceptive this time of year, this period, and so it is important to just stay on top of the fact that um, you gotta maintain a sober look at the fact that the delta isn't going to reflect the actual intent of the market or the participants, other than to roll. With that in mind, I want to share this with you. An important chart during the roll, and it's the pace of the roll in the ES minis. And as you can see, we could also look at the micros, but let's just look at the minis just to stay constant with the past. The roll was a little bit sluggish last week, but it has picked up quite well on Friday. It is well within the band. It shows the current roll. It shows that it's off, but this will climb up as today starts. We are 4 days away from expiration, and as you can see, generally only about 80% of the open interest rolls. The rest are executed as hedges or whatever against. They're basically financially settled, and so we want to keep track here. Once we get into about 90% of the 80%, it's pretty much back to normal. This has happened on Wednesday, and until then, we need to be cautious with how we read volume, how we read the volume profile, and especially how we read delta. This information is available to you on the CME website. It is updated every day. And it's important to keep track of. So this week, quad witching Friday. On top of that, looking at the high impact releases for the week. We do have a couple of key numbers tomorrow from Great Britain, the claimant count; from Germany, the zoo economic sentiment; on Wednesday, from Great Britain, the inflation rate; Canada inflation rate; U.S. retail sales. But we also have the Fed decision this Wednesday at 2 p.m. Eastern, Wednesday at 2 p.m. Eastern, in addition to rollover and quad witching. Thursday, we have the BOE interest rate decision. It's the Bank of England, and that wraps up the week in terms of the high impact figures. So overall, likely to be a pretty busy week, but we need to be careful in terms of the commitment of the market during rollover. This is traditionally, for me personally, in a 20-year record, or at least 18 of those are in futures. Uh, the record there is that this is a week that is best kept to a conservative level, and to exercise caution during this period. So that's that. In turn, looking at what's likely to be out today. We do have a bunch of numbers. 10 p.m. Out of China, and that's it for the calendar for today. Uh, let's take a look at the overall picture of the market, and I want to do that by just diving kind of head first as I come back from a 2-day break here. I want to get back into the narrative and take a look at the big picture. Remember, I'm quoting December, okay? So if you're still on the September contract, the numbers you see here on the screen are going to be very different, and they're just not going to match. So this is what December looks like. The December contract looks like, and the high to just, if you want to verify whether your data feed has back adjusted the contracts prior to December, the all-time high in the ES is at 3576.75. And like I pointed out on Thursday morning, the premium is negative 10 and a quarter. So take September contract and any contract before, reduce it by 10 and a quarter points, and you would match December's contract. Otherwise, you end up with a gap of 10 and a quarter points on Thursday, which is a non-existent event. So with that being said, what have we done? We pushed to all-time highs. Let me get my yellow pen here. We pushed to all-time highs, and then we came off pretty strong. We moved right back into this heavy distribution area, which was marked with 3351 before, and 3371, which is now 3360.75 in the December contract, 3371 in the September contract, 3360.75. So the market has moved down, back down, and it's been very, very orderly as far as I can tell, just reviewing the action last night. Pretty orderly action. We've moved back into balance. We've got this high volume node here, and we have pushed through, tested the other side, moved back up to the 20-day average here on the RTH. This chart here is RTH only, or pit session only bars, daily bars, and we are stuck in this high volume node area, multi high volume node area, in what was formerly acceptance. We pushed through down to 32.98 and a quarter, which is just below the 3300 century figure, and we basically tested this double bottom, this important double bottom on the gap, and it leaves us with this gap zone area to fill at 33.90 and a quarter next. So as of right now, what we've got is an impulse down, a pullback that was quite orderly, and then a continuation move. You can see there's a lower low here. What we also put in that you need to be mindful of is this 34.14 double top on a daily. In fact, this day here had 34.1375, And then the next day came in and put in a high of 34.14. That was last week's high, basically. So we have a weak high here on a retest of the 20 moving average, simple moving average, and we have a continuation move. So it's really important today to watch to see if we get back into this candlestick from Friday. So if let me just grab these. In fact, I want to hide the boxes. So let's hide these boxes for a second. Boop, boop. Okay. Um, so what we want to pay attention to is do we get back into Friday's range? This is an important test this morning. If we get responsive selling back to last week's point of control, which is just below, if we get back in there, then we are likely to be stuck here for one more session this Monday and break away this Tuesday. And there's a stronger potential for a push below this closing price, Friday's closing price. So we've had three closes within range, and then Friday tested down and had a pretty decent rejection of that low below 3,300. But if we push back in, we are likely to get back to this point of control. Let me grab it. This point of control here, which is at 33.40.75, it looks like. So if we get back into Friday's range, we are pushing for 40.75. If we don't, if we push in and start to rotate back up, then this double top weak high becomes a huge, huge target, and that weak high is likely to break and then end this rotation down and start walking us back to this most important price, which used to be 35.09 and a quarter, I believe. 35.09 and a quarter, 35, yeah, something like that. 35.04 and a quarter. That'll be the key price to test up here. So these are the kind of the big areas. The big areas are likely to be this 40.75. We are in the low volume node of last week, as you can see here. We are in the high volume node of this entire composite area at 60, 60.75. This area is quite important just below us. And as we clear, if we test down and we clear this area, then we're aiming for 34.14. So if you're long and there is really good help, kind of a good, I don't want to say positive delta, because delta for the week, unfortunately, is marred by the roll. But if we see rotations expanding to the upside, you want to hang in there. In my opinion, you want to hang in there to that 34.14 break, and it's likely to start pushing its way back to 34.45 or so. That would be the next area up, 34.45 right here, and then beyond there, 34.94. And then we'll be back into the upper distribution in near the all-time highs. Okay, so we have tested and have held the 50 SMA. We've tested VWAP from the run-up at the beginning of August, and are holding tight. So really important. I just want to review that and give you kind of the big picture. Really important that we watch for what it does as it pushes into the prior day's range, if it does, right? So we are trading up here right now, 33.90, 64.50. The prior high is at 58 and a quarter. The prior high was at a low volume node, very orderly test there. The Friday opened just above the point of control, was responsive, moved right to the point of control on the nose, on the point of control, held a response up, moved back to the point of control, consolidated here, and on Friday started forming the point of control for the day, right on top of Thursday's point of control. So what this is saying is the market is completely imbalanced, and if it gives this up, we are likely to break down, which we did. And then what does it do? It breaks down, puts in a higher low, and then it tests that point of control from the bottom. This is a very, very well organized, short time frame trader controlled market that we were in on Friday. This is kind of like you know I, I, I just my mind just came up with a crude word, but I won't use it as I'm broadcasting. Um, but this is a kind of fantasy material for volume profilers or market profiles in general to see an auction being so orderly, because now uh, there's a little more predictability, in my opinion, as to what the rotations are likely to look like. And so we tested from above, we pushed to the high, we failed at the low volume node, we break down to balance, and then we test the other side of balance, pull back to the prior low, again, a day time frame level. So this gives us a clue that day time frame traders are in control of this auction, especially this time of day, lunchtime here in Chicago. Puts in a higher low, pushes back into the range. And where does it go? It goes to mid VWAP and the prior day's point of control, the current day's point of control. Puts in a higher low again, moves back into the high volume node. See that? The high volume node formed right here, big zipper. Essentially a zipper becomes a congestion area, which forms a high volume node, comes back to the high volume node, and then we have an impulse up into the close, and we close where? We close right on top of, or right around, the prior day's point of control. Okay, so this is a market that is saying, look, we've tried to break out of this double distribution, could not. We've tested below, could not hold, came back into balance, and then, so we still don't know if the market is going to test down or up next. Well, guess what? We do know now. With the overnight session, we know that the market gapped up and is testing higher. So now, does it come back into the prior day's range and the point of control that's below us in the 33.30 area, or does it make an attempt lower, push higher? And if it pushes higher, boy, you get your long on in the 33.60 area, and it's pretty much a swing trade, in my opinion, a well-positioned risk-reward trade back to 34.14 from here, which is about 50 points higher. I'm not recommending that as a trade. I'm not a swing trader. But I'm just telling you that this is being quite orderly. So here we are at the low volume node of Thursday, above Friday's range, and we are teetering here, and it's going to be very important to watch to see how it responds this morning. I'm going to be paying very particular attention to how it's responding as we open. Here's what's happened overnight. Remember, the blue profiles are the day session profiles. The orange profiles are the full session profiles. So the orange profile here includes the day session, so we can get a view of the entire auction. And this profile here is only giving us the extended trading hours. 190,000 contracts traded. Again, don't forget it's roll week. Delta flat. Caution with the use of delta here. But overall, we're accepting prices higher. We've moved the point of control higher. We've moved the value area higher. And the market is accepting these prices with VWAP and the point of control on top of each other in the overnight session. It held the session mid so far. down at 55-ish. It pushed through by just a little bit. It basically held the mid, and it's holding above the prior day's price. So does it consolidate, pull back, try to push below 33.50, and then get an impulse up to continue higher to the high volume node of Friday initially? That high volume, I mean, not Friday, Thursday, that high volume node is at 78, becomes the first key target. Otherwise, we're looking at, pushing the 3400, 3406, 3414. Okay, so that's where we stand this morning. As we zoom out on this 15-minute, we can see a nice sloping uh, a nice sloping trend line from the top recently. As we consolidate, and we see one from the bottom as well. It is a classic triangle. This would be a bear triangle until it breaks up, which is what's expected. I mean, the test on Friday is quite clear, quite obvious. It pushed below Thursday's range and came right back into balance. To me, that's a clue, even though someone who's trading patterns is thinking, hey, this is a bear triangle, and it's likely to, a bearish formation is likely to break down. To me, the auction is saying, look, we are basically stabilizing. We're stabilizing. So the question is, do we move to the upper distribution? Do we move to the upper distribution here and test this 14, or what? That's what we're looking for today, and the market will clue us in as the day moves forward. So that's really, those are the kind of key areas we want to pay attention to. Even though it's rollover, the order flow seems okay. There's still zingers in here. It seems like we're still getting these really prongy, high volume node kind of single lines. We get these big bids and offers, but I believe that a lot of that is a result of really a lack of liquidity in the ES. If you look at the ES, even during the day, it is really just running 100 lot to 150 lot per price per tick, when it usually runs 300 or so. So it's very thin. So these high volume nodes, these high volume offers tend to stick out quite a bit, but they're only 300 lots. They're not that big, right? So normally we wouldn't see this kind of these jotted line here in the liquidity. And as we look at the depth itself, really it's tough to see what it's really accomplishing. It's moving towards these bigger prices, colliding, pulling back to go, moving to a higher price, colliding. I'm having a hard time. Um, I'm having a hard time leaning on the book, leaning on order flow currently, although I'm paying attention to it, under normal circumstances. But the order flow, now marred by the rollover, the order flow is really not that legible. It's a tough read in my opinion. Let's take a look at what's expected for today and get you guys on the way to the beginning of your session. So we've done a recap of what has happened so far. Hopefully your thoughts are in line. The expectation this morning, we are on top of the point of control, on top of VWAP. The expectation this morning is a response back to the Friday auction, consolidate in Friday's value area, and I'm looking for an impulse higher and the start of a move back into 33.80, expecting consolidation at 33.80, given the high volume node of Thursday, given that this is the bulk of the volume from Wednesday, expecting it to consolidate here for a little bit and then to grind its way to 3,400 before stopping out before the end of the session. It is Monday, and it's likely to be a little bit muted in terms of range, but in case it does take off, this is what we're looking for. Secondary open auction pushes the overnight high, gets to 33.80, impulses down, comes back towards the opening swing, and comes back into the prior day's range, consolidating here at the 33.40 area before running up into the close. This is more of a test from above back into balance before the market has a strong enough base potentially to turn back up. If it breaks through to the other side, look out below. It's likely to squeeze a lot of the volume that occurred on Friday. It's likely to get back underneath the 16, and if it does, then we are looking at the 93 below as a key target. That would be scenario 3 is an open test up, break the high, and then drive down. Let me draw it real quick so I can refer to it tomorrow. So it would be an open test up, head fake, drive down, consolidate at the 2-day point of control here. Okay, consolidate here, and then move lower towards the lower bounce, but basically breaking 33, 32, 80, and moving towards that area down there. Okay. So I'll leave you with that. Good luck today, and I'll catch you tomorrow. Hopefully your mind's in the game after a nice weekend. Cheers, everybody, and mind your risk. Take care.